Good morning. My name is Faisal Bagwala and my subject is accounting for managers. Now today I have discussed a wonderful topic is final accounts. First of all, what is final accounts? In final accounts, we are preparing trading account, profit and loss account, balance sheets. So in that situations, they are so the what the positions of the business are there. The proprietor or the owner of the business is earning or not, whether they are the situation in profit or whether they are in the situations of loss. So the final account shows that there is a positions of business. In accounting cycles, first is known as transactions, journal entry, ledger posting, trial balance. So after trial balance, we are preparing a final accounts. In final accounts, there is preparing from the trial balance. So we are discuss about of final accounts. What is final accounts? First of all, we are discuss about of its meaning. What is the meaning of final account or financial accounts? Financial statements are the reports of financial information presented in summarized and organized way to reveal the financial health of the enterprise. As we discussed before this slide, there is a positions of business. So in that situation, there is also written that health of the enterprise, means whether they are profit or loss. So it is known as the health of enterprise. Each and every businessman wants they are earning maximum profits. So they are established this business. Whether they are loss, so they are in that liquidation positions. So it is going on a liquidation position. Now next, traditionally the term financial statements include two basic statements. We discuss these slides. There is a three financial positions: trading accounts, profit and loss accounts, and balance sheets. In that situations, balance sheet which show the financial positions of an enterprise a particular point of time. It is shows the financial positions, whether they are in asset sides, assets is more on liquidity, or both are maintained. So it is prepared for the balance sheets. Trading and profit and loss accounts which show the financial performance of enterprise during a particular period of times. First, trading account. Trading account it shows that gross profit in that business, and profit and loss account, all income and expenses are debit and credit sides. Then it is deducted from credit or debit sides. They are earning profits or loss, so it is come under the net profits. Next, objectives of financial account. What is the objective of final account? Final accounts refer to the various accounts and statements that provide information related to the progress of the business. Means each and every businessman wanted the progress in their business. So the final account help him, the businessman, whether they are profit or loss, or the progress of the business is going or not, the market share also is increased or not. So the final account shows that there is the increase of market share or decrease of market shares. So it is the main objectives of financial account to know the business positions or to know the situations of the market. These are prepared from the trial balance. Financial accounts are preparing from the trial balance. It is taken from the trial balance. After trial balance, we are putting in the entry into the final account. They provide the following informations. Which types of information they provide? Profit earned or loss suffered by the businessman during a particular accounting period. I already discussed that whether they are in profit situations or loss situations. In that situations, whether they are profit or loss. So the final account shows that whether he is in profit or loss situation. Financial positions of the business means sometimes what the businessman is, the positions are liquidations situations is more from assets. So in that situations, they are going from liquidations. So in that situations, the final account shows that what types of business positions are there in the businessman's. So the main objectives of the final accounts. Next, accounts and statement comprising final accounts. What types of comparisons? Now we first is trading accounts, profit and loss, balance sheets. What is trading and profit and loss? Trading account and profit and loss account together known as an income statement. Nowadays there is a accounting standard 14. In that accounting standard 14 there is a situations there. So in that situations both are include trading and profit and loss accounts. So it is known as a come under the income statements. Income statements are the financial summary of the account affect the profit and loss positions of the business. Income statements show that what it is the net profit, what is the net profits in that particular businessman. So it is the profit and loss account shows that net profit of the businessman. Next, first is trading account. We are discuss about of trading accounts. It shows overall results of purchasing and selling of goods. In trading account, the businessman is purchasing raw material out of her business, and then it is converted into processing, and then after they are processing, they are converted into the output. So output is our selling. So trading account is shows that the purchasing from outside and selling from his own business, whatever they are processing converted into the output. So it is a selling. In that trading account also that opening stock, closing stock, what types of first is whatever the closing stock they have. So it is include all direct expenses include in the business. All direct expenses, wages, tradings, royalty, all that are the freight. Also there is in the trading accounts, it is direct expenses, carriage inward, it is direct expenses. It provides gross profit. After that, when we are closing the trading accounts, so in trading accounts there is a situations there is a what is the gross profits or gross loss of the businessman they have. So gross profit earned by the businessman, total sale is greater than the purchase. When there is a situations sales is greater than the purchase, so it is a profit. Loss, when loss is from them whether the purchases is more from sales, so in that situations there is a loss. Next, there is a format of trading account. There is a format trading account for the period of ended. There is a debit sides DR, credit sides particular amount. First is opening stock. The businessmen have their opening stocks are there or not. Purchases, they are whether the purchase is outside. Less purchase returns means they are returned. Suppose there is a defect in the goods, so they are what they are doing, they are the returning the goods to creditors. So in that situations is purchase returns, wages, customs and import duty, carriage expenses, royalty, manufacturing expenses, packing expenses. In credit side, sales returns. Suppose there is a debtor, so in our goods also have a defect, so the debtor is what do they are returning the goods to us. So in that situation sales returns, closing stocks. Now the situations is that if the debit side is more, so it is our loss transfer to the profit and loss account. If credit side is more, so gross profit transfer to the profit and loss accounts. Now next is profit and loss account. What is the profit and loss? Profit and loss account shows all income and indirect expenses related to the business. Now there is expenses and income is all expenses come on debit sides and all income is come on credit sides on profit and loss accounts. Indirect expenses related like office expenses, stationery expenses, telephone expenses, administrative expenses, factory expenses. So it is all related to indirect expenses. Administrative, selling expense, distributions. Profit and loss account provide net profit. What they are, so after we are closing profit and loss account, they show that whether they are the net profit situations or whether they are net suffer situations. So profit and loss show that net profit or net loss on that situations. Now format of profit and loss account. What is the format? Same format of trading account, but in that situations all expenses are debit and all income is a credit sides. Particular amount for the period of profit and loss account for the period of ended. Suppose from gross loss, so it is come on the debit sides. On from trading account there is a loss, so it is debit sides. Salary, we are already discussed salary, rent, commission, advertisement, bad debts, discount, all are our expenses, so it is come on the debit sides. And credit sides, gross profit, interest received, whatever income we have received, so in that situations it is our income on, it is come under the credit side. Income, interest, commission received, discount received. And that, then after we are closing the profit and loss account, in that situations suppose credit side is total more from debit sides, so it is come under the net profit. It is our net profit transfer to capital account. And suppose for debit side total is more, so debit minus credit, so it is our net loss transfer to the capital account. Now next, balance sheet. Balance sheet is not an account. Balance sheet is a statement. They show the business positions of the financial years. So in that balance sheet, it is a financial statement that states the financial position of the businessman. It is list asset and liability of a business. There is a list. There is no debit or credit sides, but in that situation there is a liability and assets. So it is a liability and assets. The assets and liability on the balance sheet are listed either of the following two order: liquidity order or permanency order. Now we are showing the format of the balance sheets. Liability, as we discussed about, there is no any debit side, there is no any credit sides, but there is a liability and asset sides. Liabilities like that: capital, long-term loans, sundry creditor, bills payable, outstanding expenses, bank overdraft. Assets, you already we know that what types of assets there are: machinery, cash in hand, cash at bank, prepaid expenses, bill receivable, sundry debtors, closing stocks. In closing stocks there is a raw material, working in progress, finished goods, plant and machinery. So in that situation balance sheet show that both sides are total, both side totals are same. So the financial accuracy we are getting from the balance sheets. Next, now we are taken the practical examples of final accounts. From the following trial balance of Mr. John, prepare trading and profit and loss account for the year ending 31st March 2014. So financial year is 2014, 13 to 14, and the assessment year is, you know that, 12 to 13. So that is the transactions, particular debit, particular credit. Now we are preparing the trading accounts and profit and loss accounts, both are we are preparing. Now that first is entry is purchases. You know there is the purchases is our trading account, so it is come under trading account. Purchases is on trading accounts. Now purchases 4,40,000 rupees. There is a purchases. Now next transactions, what is next transactions? Salary and wages. Salary is our expenses. So in that profit and loss account, all expenses come under debit sides. So in salary and wages is going from the debit sides on profit and loss accounts. We are checking that salary and wages 3,50,000 rupees. It is our expenses. Now next, office expenses. There are the words given is also known that expenses. So in that situations you are getting that profit and loss account on debit sides because it is expenses, it is office expenses, it is indirect expenses. Office expenses 4,000 rupees. Next, trading expenses. Trading means what we are purchasing or selling. So in that situation trading expenses is come under trading account. In trading account there is a debit sides on trading account 8,000 rupees. Now we are checking that trading expense is 8,000 rupees. Next transactions, same here is factory expenses. Factory is our indirect expenses, so it is come under on profit and loss sides 11,000 rupees. Profit and loss sides of factory expenses 11,000 rupees factory expenses in profit and loss accounts. Now next transactions, what is next transactions? Carriage inward. Carriage inward means what? Whatever the material we are purchasing outside, so in that situations there is a trucks, or we are suppose for example for chota means like Tata Magic, like small commercial vehicle, so that goods is transferred from them to us. So in that situations whatever we are paying from them, it is in carriage inward, so it is come on the trading account. Carriage inward 8,000 rupees debit sides. Next, returns inwards. Return inwards means what the goods is whatever we are selling, so in that situations the goods is come on our sides, so it is inward side, so it is sales minus return inwards. So 12,000 is going from the in trading accounts, sales return 12,000 rupees. Next, transactions, discount allowed means whatever we are selling, so in that situations we are given the discount to him. So discounts is on the profit and loss sides, and profit and loss sides discount is come on the debit sides. We are checking that discount allow 4,000 rupees on profit and loss accounts. It is our, we are given, it is for our expenses, because whatever we are selling we are given discount for him. Suppose for example we are given 1,000 rupees mal, we are goods we are selling to him. In that situation they want 100 rupees discount, so it is our expenses, so what our income is deducted, so it is our discount allow is our expenses. Next, commissions is also our expenses. Suppose we are we are given the goods to our third party, we are say that brokers, like broker are selling our products for market, so in that situation we are given the commission, so commission is our expenses, so it is come under the profit and loss accounts. Commissions 2,000 rupees profit and loss accounts. Now next transactions is stock is our goods, so in that situations it is come under, it is opening stock, it is come under the trading accounts, so it is in trading accounts. Opening stock 60,000 rupees. Now next transactions, income tax is our liabilities, it is income tax is our expenses, whatever we are earning from the year, whole year, so after we are whatever we are given to him, it is income tax, so income tax is our expenses, it is come under the profit and loss sides. 40,000 rupees, 14,000 it is come under income sides to income tax 40,000 rupees. Now next transactions is cash in hand 2 lakh rupees. Cash is our assets, so in that situations they are not come on trading side, also not come on profit and loss sides, so cash is our assets, it is come under the balance sheets on asset sides, so we are not preparing for balance sheet, we are preparing only trading and profit and loss accounts, so cash is only 2 lakh rupees is our asset sides. Now next is sales is our income, and it is come under the trading account, because we are selling goods, so it is goods are our trading, so we are in profit trading accounts. Sales is 10 lakh 40,000 rupees. Now we are taken from sales return, so we are deducted from sales to 12 lakh rupees, 10 lakh 40,000 minus 12 lakh, so the remaining amount is come after come is here credit sides 10 lakh 28,000 rupees. Next, return outward is whatever we are purchasing goods, in that situations they are the defective, so in that situations what we are going to do, we are given from the creditor backs, so it is sales outward is our purchase return, it is known as a purchase returns, so it is come on the trading and trading account. Purchase is 5 lakh 40,000 minus purchase return 12,000, after the amount is remaining they are going from outside like 5 lakh 28,000 rupees. Next, discount receive, it is one types of income, whatever material we are purchasing outside, so the creditor is given discount for us. Suppose we are purchasing goods 5 lakh rupees, in that situations creditor is given given discounts for us, like suppose for 2,000, so it is 2,000 is our income, so in that situations it is come on profit and loss account credit sides. We are checking that discount received 6 lakh rupees. Next, interest received. Suppose we are given the loans to someone for outside of our business, so we are given loan to him, so in that situations they are given interest for us, so interest is our income, so in income side, so it is come under the profit and loss account credit sides. interest received 3000 rupees. So it is come under the 3000 rupees on profit and loss account credit sides. What is next? Capital. Now capital is our liability. So in that situation it is come under the balance sheet liability sides, but there is no come on trading side, trading account, or not come in the profit and loss account. So capital is not required for these sums, but just for the basic idea, capital is ongoing from the balance sheet. So it is completed, but there is a last entry also there. Closing stock is valued 1,35,000 rupees. So closing stock is our each and every additional informations they are given the two there is a dual effects. So in that situation closing stock is come under on trading accounts and also come on asset sides of balance sheets. So closing stocks are there in the trading account. Closing stock 1,35,000. We are not preparing the balance sheets, so it is also come on the asset sides of the in balance sheets. Now after all the informations are completed, then we are first is completed. First we are close the account of trading account. After closing the trading account, we are getting the gross profit or gross loss. Now we are closing the trading account. Now you saw that the trading account is situations is showing that the credit sides total is more from debit sides. So we are first closing on credit sides. So the total is 11,63,000 rupees. Both sides total is 11,63,000 rupees. Now after 11,63,000 rupees, what is the debit? Is debit sides is all total we are deducted from the 11,63,000 rupees. The remaining amount is that gross profit 5,59,000 rupees. Now gross profit we are transfer into the profit and loss account. Now we are going from the profit and loss account. Profit and loss account, we are taken gross profit from them. Gross profit by brought down from the trading accounts 5,59,000 rupees. Now in that situation same things we are doing from profit and loss account also. Which sides total is more, debits or credit? Now I think that it is a credit sides. So first we are closing the credit sides total 5,59,000, 3,000, 6,000, 5,68,000 rupees. Both sides the total is same. Now we are calculate the amounts of debit sides 3,50,000, 11,000, 4,000, 4,000, 2,000 and 14,000. Now 5,68,000 all amount are here total deducted from 5,68,000. The remaining amount is 1,57,000 rupees. It is our net profit. So net profit is transferred into the capital account. So it is a basic idea about of just profit and loss account, trading account. So thank you so much and have a nice day. Thank you. Now depreciations 1,000 rupees on debit sides. Now next transactions is cost of goods sold. Means cost of goods sold means whatever we are purchasing. So in that situations we are purchasing goods on like we are cost of particular cost. So in that situations it is our expense. So it is 20,000 is come under the debit sides. Now we are checking that debit sides, cost of goods sold, debit side 20,000 rupees. Next, what is the entry? Sales. Sales is our income. So in that situations all incomes are on credit sides. So in that situation sale is come on trial balance is credit sides 2 lakh rupees. Sales is 2 lakh rupees credit sides. Now next, what is the next transactions? Purchases. What is purchases? We are already discussed about of that. We are purchasing raw material out of the out of our business. So in that situations purchases is our expenses. So in that situation in trial balance purchases come under debit sides. Purchases 1 lakh rupees debit sides. What is the next transactions we are checking? Capital. As we discussed, capital is our liability. So in that situations the rules is say that all liabilities and income and gains are on credit sides. So capital 3,39,000 rupees on credit sides. Capital 3,39,000 it is on credit sides on the trial balance. What is next? Drawings. We are already discussed about some drawing. Drawing is persons are there taken money from them own businesses, so it is known as a drawing sides. So in drawing situations, drawing is debited because there is a expense for businessman. So in that situations, the cash is taken from the business, so it is drawings come under debit sides on trial balance. 5,000 rupees drawings. Next, motor vehicle. As we discussed all assets, motor vehicle is our assets, so it is 50,000 rupees is come under the debit sides on trial balance. Next is machinery. Same, machinery is our assets, so in that situation machinery also 1 lakh rupees is come under the debit sides. Same. Now next is also building. Building is also our assets, it is come under the assets, so it is asset sides, so in trial balance it is debit sides. Next is stock. Stock is 50,000, so in stock it is our the stock is our assets, because the particular situations the stock is there in the business, so stock is our 50,000 rupees is our assets, so it is come under the trial balance on debit sides. Stock 50,000 rupees. Now next is bank overdraft. Bank overdraft is a liability for us, because bank given the limit about each and every accounts there is a limit, but bank is given over limit. So in that situations you are taken more money from bank, but you are the liable for to pay him the pay whatever amount you are taken from their over limit. So in that situations bank overdraft is our liability. In that situations it is come under credit sides on trial balance. 10,000 rupees we are checking that 10,000 rupees. So now all the transactions are completed, then whatever we do, we are checking the arithmetic accuracy or not. So we are checking that debit or credit both sides total are same or not. So we are getting the total. Here is the total. Whenever you are calculate, the total is same. So it is known as that we are the method whatever we are prepare the trial balance is it is arithmetically correct. So there is no error in trial balance. Now there is a total of 5,69,000. This is the basic examples of trial balance, and I think it is the accounting cycles. First is general, ledger posting and trial balance, then after is financial account. So thank you so much, have a nice day.